Hello, welcome to Micro Atlas. Today we're going to be discussing a 100-year-old speculative chart and what it says about Bitcoin. Now, this was originally made for the stock market and it still works, but right now, because Bitcoin is becoming a more mature asset, it's starting to follow some of these rules that Jesse Livermore has wrote on his notebook 100 years ago. All right. So Jesse Livermore, if you don't know him, he's one of the most successful market speculators or traders in today's terms to have ever lived. He made fortunes in the stock market, and this paper that we're going to be discussing was taken out of his notes after he had died. He actually had killed himself in a hotel. So if you want to know more about his story, I'll probably discuss it a little bit at the end of the video. But I definitely recommend reading his biography, Reminiscence of a Stock Operator, as all recent successful, the greatest investors and market speculators in the market have referred to this book as a turning point in their trading career, including mine. I had started to become more profitable after I took some of his strategies and charts and started to apply it to modern trading and speculating. So yeah, without further ado, this is Jesse's Livermore speculative chart. I'm going to explain it as we refer to it on Bitcoin's price and see the similarities and where we had diverted from it. So if the price of Bitcoin diverts from the structure, then it means the bull market has lost steam. All right, so steam, and in that way, it meant really we didn't have an euphoric speculative phase, but it was we died out at the end, right? And the speculative chart will show that because everybody felt that this bull market hadn't really went through the mania phase, right? And that's true. We will look at it. So in the first thing that we can see, it's an uprising channel at the start, which refers to that zone right here, the cylinder, accumulation cylinder, with widening mouth. All right, so we have an accumulation cylinder here with widening mouth. The first 2 points actually hit the top side of the cylinder, or almost hit, right? With increasing positive volume. So the secret to his trading success can be attributed to as well him really caring about volume and seeing how volume affects price and what it means to the chart, right? So the bottom here is the volume, and this is basically the channel and where we hit, right? So the first hit, we did get positive volume. Second hit should be an increasing positive volume, which we saw right here. The plus means increased volume. The minus here means decreased volume. So in the drawdown, when we hit the number 3, we should see lower volume, right? As market participants are not interested in shorting the market and other reasons, right? But we're just referring to it as what he indicates right there. So usually volume with direction, that indicates continuation, but decreased volume when in a direction, that means there's kind of divergence. You know how people use it in RSI, but in the RSI it doesn't work so well. It takes a very long time. But with volume, it is a much better indicator, right? So there shouldn't be any divergence. In the 3, we see reduced volume, and then on the number 4 right here of the accumulation cylinder, we hit it again with increased volume. 4, we hit it again in increased volume. Okay. 5, we hit the bottom channel with decreased volume, but on the uprise, we hit the number 6 with increased volume, and then on the number 7, finally, we hit the bottom channel with decreased volume relatively to the previous hit of the cylinder, right? So it's relatively, it is decreased volume. But here where we start to divert, okay? And this was one of the early signs that the bull market phase of the cycle has ended, and we might be diverting from a euphoric top to entering the new bear market, which coincided with the 4-year cycle, of course. Everything goes in hand, and that's how you form the full puzzle, by putting some of these pieces together. So on the 7th, we saw decreased volume, but where we started to divert is the number 8. We started to go up, but the increased volume related to selling, not buying. Here was a divergence, right? the increased volume happened on the downtrend, not the uptrend. And we weren't supposed to hit on the 8th point, the bottom side of the channel. We were supposed to hit and break out of the cylinder channel with the widening mount. You see, that was one of the very early signs that we may not be an euphoric, we might not have an euphoric top, and we may be heading into a bear market. But we can also use Jesse Livermore speculative chart to actually learn about this period, surprisingly, right? Through his analysis of volume and what it told him and what it can tell us now at the current place. Now, we might not be following that, but we're definitely following the volume pattern, and it is showing signs of weakness in a way, okay? So what we can learn from Jesse Livermore is that for a trend to continue to the upside, on the way up, the volume should be increasing. On the way down, the volume should be decreasing. But when we divert from that, then the trend has changed and we're entering a new phase of the market. Now, let's skip the 8 and 9 and 10 since we didn't have the euphoric top. But what can this tell us about the downside? When we get the downside, when we start entering this bear market phase, how does the volume behave? And are there any indications that the downside is likely to continue or not based on just reading volume, right? On the 10th, which we would correspond to kind of here, right, we saw increased volume. On the downside, you had seen increased volume again. So here on the downside, we had seen the increased volume, which relate to the 11th point right here, right? But on the upside, you start seeing decreased volume right here. You see that accumulation phase that was trending upwards. That's the upside one. We saw decreased volume, as Jesse Livermore speculative chart showed 100 years ago on the stock market. And it's nice how some 100-year-old charts and lessons still work today. That means the market changes, but not drastically. There are some key elements that remain with the markets through different assets, right? Which is useful for us as market speculators to learn from and adapt it to our strategies. On the way up, the 11th point right here, the 12th point, we saw decreased volume. On the way down, again, we saw an increased volume. So here on the way down, that's the 13th point, we saw increased volume. But here, we did not get continuation like what Jesse Livermore showed. Now, that probably can be attributed to the fact that we did not have an euphoric top and we did not go through the correct sequence of 8, 9, and 10. So I would imagine that instead of having a crash as such, we would have a more cool down crash with steps taken, right? Maybe some of these repeating, right? Going up and down, down and up, with the volume attributions that had been indicated. So yeah, we're not getting really the 14th point, as here we actually went to the upside, but we copied some elements from the 10, 11, and 12. You see, increased volume on the downside, reduced volume on the upside. Then the next phase really should be increased volume to the downside, if this is gonna probably stick around or not. So if we follow Jesse Livermore's speculative chart, then the next step, since we got decreased volume on the way up, the next step should be increased volume to the way down, right? And of course, these things do not surely happen, but if the price has followed this type of strategy and relation and correlation with volume, then I would expect more probabilistically than not, if the macro conditions do not change, then we would likely go down with increased volume, which implies a continuation of trend until we see some signs of increased volume on the way up. If we see increased volume on the way up and decreased volume on the way down, then that's when the phase of the cycle and the regime changes to become on the bullish side, right? So what I expect from here, and of course nothing said in this video is financial advice, it's really for justification purposes only. I'm just looking at the chart with you on Jesse Livermore notes. as you are right now. So I'm gonna make my assumptions and probabilistic decisions based on that. And for me, I think we were probably gonna see another leg down with increased volume on to the downside to have a higher chance than actually forming a higher high from this point based on this specific puzzle. But of course, all elements of the market and predictions and directional decisions should be made through a combination of factors rather than one. And in the previous video, I gave 8 major macro factors that affect Bitcoin's price, and that includes inflation, interest rates, liquidity, Fed balance sheet increasing, and more technical analysis and other stuff like that, which I would recommend you watch if you hadn't, right? So yeah, where I would expect is for the price to go down and continue this downward move until we actually see some increased volume on the way up, decreased volume on the way down, and then that would shift the regime to the upside. Now, where do I think we're going down? Probably not that hard. Now, I do release a video on how low can Bitcoin go, and I do believe we would probably find a bottom between the 38 to the 51 price range, but I'm more leaning to the downside, especially considering that inflation expectations and interest rates are unlikely to be raised right now, but the Fed is being more hawkish, right? So yeah, this is my view on the market based on this analysis. And right now we can discuss a little bit of Jesse Livermore story, and maybe you can look into his book, which I think is very useful asset for any market speculator. So Jesse Livermore, he started as just a kid trading in bucket shops in the 1900s. He would go and just look at boards, you know, there wasn't really any screens or anything. They would have boards and numbers, they would change them. And he noticed there's a pattern in the numbers that had been changed. He wasn't really looking at charts, he was looking at just numbers. And from those numbers, he noticed patterns and he started to make a lot of money. He started to make bets, and these bucket shops would start to kick him out, you know, and he would just go to all the bucket shops for trading in his city, right? They all blocked him, so he had to actually go to New York, where he lost a lot of money because really the trading in New York was a lot different than in the bucket shop. And so every time he was losing money at Wall Street, he would go back to the bucket shops, steal their money from different cities, and the whole city would know him at some point until he became successful in New York. And then he was known as the boy plunger. So when he goes in, he goes all in, and he makes a killing. So a lot of the market crashes and the recessions that happened previously in the 1900s when he was alive, uh, they would put out news that Jesse Livermore crashed the market, because he usually goes on the short side, right? Sometimes he goes long, but he goes on the short side a lot. And one tip you can learn from him a lot is what he says: "It is not my doing that what made me my money, it's my sitting." And he says, "You got that? It's my sitting." So trading is not all about activity, right? It's more about research and planning and understanding the market and getting the intuition and just waiting for the right moment to execute the trade. Now, while Jesse Livermore had made millions and millions, equivalent to billions in today's terms, he had also lost millions and millions of dollars. Actually, he lost his net worth around 4 times. All right. And he lost it because he just sometimes, I guess, everyone gets what they want from the market, and he forgot to follow important critical risk management rules for trading that he actually teaches, right? So sometimes he says, don't add to your losers, you know, cut your losers and add to your winners. Sometimes he does the opposite. He goes more hard, more hard, more hard under his losers, and he keeps saying, don't add to your losers, you know, like cut your losses. But he did that several times, and that's how he lost his fortunes, just because of ego, I would guess, and yeah, really being confident about an idea. Another one is he says, don't take tips from people. Ironically, I'm giving tips over here, but what he means is that don't take a tip and execute it without doing your own research and doing your own analysis and using your own thinking. All right. So the number one lesson you would learn from this book is you have to use your own thinking. All right, it's your thinking that makes your money, not other people's tips and tricks and speculative charts, right? You take that information, take that video as an information grab, a little piece, a 5%, a 5% from what you would want to do, to involve into your strategy, into your research, as an idea, as a spark to begin your research, right? So yeah, make sure you don't make trades based on what people on YouTube, Instagram, or Twitter say. Just have a filter to make sure that you just take the information and you don't take the tips. So directionally wise, I would definitely recommend not following my anything here, right? So this is all speculative. Don't follow the direction, don't follow the levels I'm saying. All you can do is take this, go do some research and analysis on your own, and then say, sounds good. I'll say it's my idea now because I did my research, all right? Or he absolutely doesn't know what he's saying, all right? So don't take this from the market. That's what I would tell you from number one. I had lost a lot of money, especially here. Not lost, but missed out on a lot of profits, especially here, because I follow somebody on YouTube that said it's going down. So I did not buy and go all in here when I wanted to. I was deciding to really go all in here, but he said it's going down. I was like, he's been right here. I guess I'll wait to get a cheaper price. And then I had to accumulate here at higher prices. Part of my position, right? I did accumulate previously here, but part of my position that I wanted to accumulate here, I had accumulated here just because I followed the tip. And Jesse Livermore tip to me, ironically, really resonated at that time of period. So if you like the content, another book I would actually suggest is Market Wizards. Those are interviews with the top traders and market speculators in the market, and a lot of them refer to reminiscence of a stock operator as a turning point. Okay, so that's some tips and hopefully some educational material for you if you had not read them. If you had read them, please tell me what you know, what you think about them. They are my favorite book, Market Wizards, Reminiscence of a Stock Operator. So yeah, if you enjoyed this video and you found it useful, please leave a like. And if you want to see more content like this on 100-year-old speculative charts, market gems, macro analysis, technical analysis, and all that, please consider subscribing because around 70% of you are actually not subscribed. That means it's good. The channel is growing fast, but it would be nice, to be in the community if you could. I'll see you in the next time. Peace out. Trade safe.